I've been away from YouTube for a while, and that's because I've been mostly on TikTok and Instagram, actually, mostly TikTok. But I am back on YouTube. I will still be posting on TikTok from time to time, but I should be mainly on YouTube henceforth. But getting right to the point, I noticed that lots of people seem to be having problems creating strategies, lots of traders. And I thought to myself, why not? Because it looks like a lot of traders don't know how to do it. So why not give tips on how to create your own strategies so that when you create your own strategy, there's a higher likelihood to stick to your strategy. Because what tends to happen is you get a strategy on the internet. Maybe you watch a series of YouTube videos and um, they present a strategy to you through these videos, and you take on that strategy and you start to trade it. For those that are smarter, they back test it first and then start to trade it. But I've realized that over time, speaking with people, when they back test strategies, because they already have um, a preconceived notion of how the strategies will fare, they don't actually back test them properly. They back test them with a veil drawn over their eyes, such that the results of the back test seem better than they actually should be. So what tends to happen is by the time they start to trade these strategies live, they start to make losses. And what happens at the end of the day, they dump the strategy and move on to another strategy, which is not theirs, which they've learned from another person. And this vicious cycle just goes on and on and on. But this happens because that strategy was actually not made for you, because a strategy is created by a trader to suit the way the trader thinks, to suit the way the trader sees the market. So, for example, if a trader sees the market as forever consolidating, or if the trader sees the market as forever trending, then the trader is going to create a strategy that works with trending markets, but not just works with trending markets, works in trending markets in a way that suits the way the trader sees the market. This is very important, and a lot of people disregard this. It suits the trader's perspective of the market. For example, I am not a trend trader. Yes, I have strategies that work in trends, but I am generally a reversion to the mean trader. So my strategies suit the way I see the market, because I am always seeing the market from a reversion to the mean perspective. So if someone that sees the market from a trending perspective, then picks my strategy and starts to trade it, they will have problems, because they will always be trying to fit my strategy to their perspective of the market, which is trending. And the strategies are not made to work that way, which is why you have a lot of strategy hopping. It's not because people love to hop from strategy to strategy. The reason they hop, one of the reasons at least they hop, is because these strategies were not actually made for them. They were made by another person for that person. So it doesn't actually suit this person, but they don't know that. They think once you pick a strategy and the strategy is a strategy that works well, then it should work well for everyone. But it doesn't work that way, which is why I am showing you how to create your own strategy, because it's when you start to create your own strategy that you will have a higher likelihood to stick to that strategy. Okay, so first on the list, I have a list of tips written down. So first on the list, let's go to the charts. First on the list is opens and closes. Now, the tips I'm going to be giving you are tips that work all through the market, throughout all markets, all instruments. However, these don't work all the time. Now, there's no strategy that will work all the time, and there's no tip I will give you or anyone will give you that will work all the time. You will never be able to go into the market at any time of day, any time of the night, and apply a specific strategy or a specific tip, and it will be guaranteed to work. That doesn't exist. And if that's what you're looking for, you should not be trading. Okay. So opens and closes. Now, this is a chart of GBP USD. I will now, the examples I'm going to be giving you, I haven't planned them out. And the reason I haven't planned them out is because I don't want it to look scripted. I don't want to cherry pick. I'm just going to give you random examples just to prove to you that these things work. You just need to do the work to find out when you want to be trading them and when you don't want to trade them. Okay. So opens and closes. Now the market reacts to the candle opens and the candle closes. It reacts to them in different ways. Sometimes it could bounce off, sometimes it could break and continue. I'll just give you one. Now look at this bar here, this red bar, this down bar here. It opened here at the top and closed at the bottom here. Okay. Now, I will put a line here at the top, or rather at the open, and I will put a line, a horizontal line at the bottom, which is the close here. Now, can you see, I'll take my crosshair, can you see how price went down, went back up, came back down, and then went up in this big bar? Where did it bounce off? It bounced off this open here. It bounced off the open of this candle over here. Can you see how it touched that open and then closed back down? That is a reaction to this open. Another one I'm going to give you is this close here. So you can see this candle opened here, closed here. And then price went down a little, went back up, and then came back down. Now, can you see how this candle went up and bounced off this close here? It also went back up and bounced off this open, the open of this red bar here. Can you see that? This happens all over the market. It happens every day, everywhere, on every instrument. Of course, the fact that it's always happening doesn't mean you have to trade every instance of it, because of course you will not be profitable. What you do is you study these instances and work out what the most probable instances are. You work out which ones are the most likely to give you a profit. That's what you do. That's what trading is all about. That's what building strategies is all about. Okay. Now, so those are just 2-3 examples I've given you, and these were just random examples. Okay. I will find others. Let's delete these. Let's just go to the previous day. Now, I'll show you this. You can see this was the close of this green bar. This was the open of this green bar. This was the open of this red bar. And this was the close of this red bar. Okay. Now, can you see how price hovered a little here, went up on this green bar? Where did it bounce off? It bounced off the open of this red bar and the close of this green bar, which is here. It bounced off this line here and went back down to close. Okay, now on this bar, this red bar here, it went down. Where did it bounce off? It bounced off the open of this green bar. Can you see? It bounced off and closed back up. It then tried to break again, went back down, but where did it bounce off? It bounced off the open of this green bar again and closed back above. Like I said, this happens all the time. Okay, now, so what's your duty? Your duty is find instances where this happens, study them, and try and work out where the highest probabilities are. Okay, for example, this is the 15-minute chart. Now, you possibly already know that price action is most reliable on higher time frames. So 1 hour, 4 hour, daily, weekly. Okay, so what you should be asking yourself and back testing is what happens when price bounces off the open of a weekly bar? What happens when price bounces off the open of a daily bar, of an hourly bar, of a 4 hourly bar? What happens when price breaks? Because remember, it doesn't have to be bounces, but remember, I think reversion to the mean. That's why I'm usually trading bounces. But if you are trend based, if you see the market in a trending with a from a trending perspective, then you'll be asking yourself, what happens when price breaks and closes above the open of a bar, the close of a bar? Does it continue? What happens when it continues? For how long does it continue? What happens when that open or close is at the start of a session or is at the end of a session? What happens when it's at the beginning of a day? There are so many ways to create strategies, which is why I'm surprised that people don't actually create theirs. Rather, they depend on the fake gurus online to give them strategies. And then after losing $50,000, they then start to strategy hop and look for another strategy that works. It doesn't work that way. Create yours. Create yours, and you will be able to tweak yours to a stage that, to an extent that you realize that it actually works. It works for you. It works for you. Okay? So that's opens and closes. Next is session highs. And actually, before I go to session highs and lows, I will mention highs and lows of bars. So I just talked you through closes and opens of bars. However, we also have the highs and the lows of bars. I'll give you an example. We can use this red bar again that we used before, but let's use another. Let's use another one. So you just see these examples are everywhere. The charts are littered with these examples. Okay, so let's take this green bar. So this green bar here closed here and opened. Oh, sorry, we're not talking about closes and opens this time. We're talking about highs and lows. So this bar went as high as here and went as low as here. Okay, so you can see the lowest part of this bar is here at the bottom. The highest part is at the top here. First, can you see how this bar went to the top here, could not close above and then close below? It bounced back down. Now, can you see how this green bar came to the low of this bar and struggled and closed just below it, and then the next bar broke down and then closed back on top? It was trying to break it, but it couldn't, which is why it closed back on top. Of course, you can see this is current price now. You can see price has eventually broken it and is going down. But there's still no guarantee that it's going to continue going, which is why you study price action, which is why you study these tips that I'm giving you. You don't just take anyone and trade it. What happens when it breaks the high or low close to a session open, close to a session close? In the Asian session, in the London session, in the New York session, what happens at these times? On the hourly chart, on the 4 hourly chart, on the 15-minute chart, on the minute chart. These things happen everywhere. I'll give you other examples. Random example. Let's find one random example. There's this one. Can you see this bar? The high was here, the low was here. First, the next bar bounced off this low, closed above. The next bar bounced off this low again and closed above. And then it started to go up. Then this green bar bounced off this high and then started to go down. These examples are everywhere. These examples are everywhere. Now, I talked about closes and opens previously. Can you see how this green bar went to the open and close of these two bars? And can you see how it bounced back down? They are everywhere, literally littered all over the charts. Okay. Look at this red bar here. This green bar came down here, and what did it do? It bounced off this low, the low of this red bar, which is why it closed back above and started going up everywhere. All you need to do is just do the work. Problem is, a lot of traders are not willing to do the work. Okay, so I've given you 2 tips on how to create strategies. Now, you don't have to use both. You can create your strategies solely based on either of these tips. You can create your strategy based on highs and lows of candles. You can create your strategy based on closes and opens of candles. You can also combine these to create your strategy. There are so many ways of creating strategies. Okay. In part 2, I will be giving you another tip on how to create strategies. See you in part 2.